record low opening for the rupee today. But my question to you is that where do you stand on this entire issue? There doesn't seem to be any kind of unanimity on the street. While some say that the real value of the rupee should be closer to 67, there are many that believe it's actually around 80. Do you see more pain? Yes, I understand these are global triggers at play. It's not in control of India and the Reserve Bank or even our macroeconomics at large. But do you even think this is the real value of the rupee, or do you think it should be closer to 80?
No, I think it's more closer to 68, 69, and that's 69. And of course, you had global event and you had a bad trade deficit number, both put together. So it just moved. So when you look at it, standalone, all-time, low, and it's just that the magic number 70 crossing and all that. But when you look at it from 69, because of what's happening globally, and we have touched 70.20, it's like $1.20. So it's not 1.2. So it's not that big a moment. Of course, we had this year particularly, no FPI actually has been negative, right? So till now we have been managing trade deficits with positive FPI flow. So this is the first time we have a negative FPI flow. So that's the reason one needs to look at it a little bit. Either the FPI flows start coming in the second half, or your trade deficit, which showed 18 for the last month, it comes down, in next few months or so.
So, Jayesh, if you think that the real value of the rupee is closer to 68, 69, and you're seeing a cascading impact of what's happening with the Turkish Lira, would you say rupee above 70 is a short-lived phenomenon, and therefore we don't maybe need to get alarmed? You've raised the issue of the deficit. It's going to have an impact on the twin deficit. You've already seen, the trade data ballooning to a 5-year high. Today, a few minutes back, India ratings of the Fitch Group has downgraded India's potential GDP growth as well. How alarmed are you by all of this?
I think more than Lira, I was not too alarmed on Turkish Lira. I think it's more about what's happening in the rest of the Asia, particularly China and Indonesia. So their currency depreciation and the consequence of that, them raising rates, that is a little bit worrying both on the rupee as well as the Indian interest rate, right? So it's basically our neighbors, basically whole Asia, and that is a little bit concerning. And we don't know where it ends up, but as of today, it's like 69. You are stretched almost like 1 rupee, which is not really bad.
Right. Jayesh, say if rupee stays around the 70-odd level, do you think it's a comfortable situation at this point of time, considering what's happening in other emerging markets and the way the outflows have panned out? It's not a very material depreciation so far?
No, absolutely. So, that's what I'm trying to say. So it's not a material depreciation. It's just, unfortunately, we touched that number, right? If this number was 72, 73, nobody would have bothered. Or it was the 67, 68, nobody would have bothered. But since that we are touching that number, and it's coincident that it's also all-time low, right? And that's where people are like kind of looking at. But I think people get over it. It's just the number sentiment is always for a few days. So from that perspective, we should be fine. Unless China, US, and the things get further deteriorated, I don't see, this may continue for some time. We may come back to 69 maybe in next 6-8 months or so.
Right. Jayesh, Russell Napier, one of the well-known global strategists, has said that the Turkey crisis could be one of the largest debt problems that emerging markets could face. If that happens, flows in the near term could take a lot of issues. I mean, it's then just about scare and getting away from any of the risky assets?
No, I think that whatever the damage for Turkey was to be done, that's done, right? So I think people are saying it's different. It's not a global crisis. It's not contiguous. And therefore, people are getting off it. And to that extent, if you really look at it, right, Turkey from its low has actually come off. So from that perspective, if it was Turkey, then we should have been appreciating today, right? But that's not happening. So now, right now, it's triggered with Turkey, but now we are also looking at our neighbors in Asia.
Sure, it's Nantara again. We've already seen official commentary coming out of the government. A lot of economists have talked about it, how the Reserve Bank in the last few weeks has spent nearly $23 billion in propping up the rupee. How sustainable is this? Yes, Arun Jaitley says we have enough forex reserves. The Secretary of Department of Economic Affairs says that. The data which is coming out on the RBI website alludes to that, though we did see it fall below that crucial $400 billion briefly. But how sustainable is it? And should India be doing it at all? We're also already on the watch list of the United States when it comes to currency manipulation.
Yeah, so if you really look at it, right, we really not has been doing it. So even if you take an average of say 13 billion as current account deficit, right, that much somebody has to give in, right? So it's not really kind of propping in. So if you look at RBI's action, it's never been to stand tall at one level, right? Even and especially in this kind of situation, if you look at the Turkish thing happen, they have been less. They're like a speed breaker, but they're not defending any level. So if you defend any level, then whatsoever reserves you have is not enough, right? But I don't think they are defending any level. And at every level, they're just coming in, selling some, which is anyway required. So people may say, this is like trying to stabilize rupee, or this is trying to, prep up the rupee. It's not really prep up the rupee. You need that. How will the deficit get funded, right? So you need that dollars.